Good afternoon, everyone. Welcome. Thank you for joining us for today's program, Digital Assets for Attorneys, Acquisition, Use, and Tracing Explained, presented by KLG. My name is Samantha Brennan, and I'll be the moderator for today's session. Just before we get started, a couple notes. Today's session is going to be an hour long. We encourage asking questions. Please feel free to drop them in the Q&A box at any time, and we'll try to address as many as we can at the end of the session. Today is also being recorded. The slide deck and a link to the recording will be provided to everybody who registered today after the program. We're very pleased to be joined today by two of KLG's forensic accounting experts, partners David Gralnick and Lou Panariello. You're in great hands with Dave and Lou, so with that, I'll turn the program over to them.
Right. Just going to breeze by our disclaimer. I'm not going to read the whole thing, but the most important part of this entire disclaimer is that this is not investment advice, okay? Dave and I gave this presentation a couple of months ago. And if you decided, wow, Dave and Lou spoke so highly about Bitcoin and everything like that, and I wanted to invest, you lost a lot of money in the last 2 months because Bitcoin has really taken quite a hit since then. So we are going to discuss cryptocurrency, discuss digital assets, not at all advocating for it, and just wanted to make sure everyone was clear on that. So with that said, Dave's going to kick it off with just some key terms and uh, try to bring it to something more familiar.
Great, thanks, Lou. So welcome everybody, and we just wanted to go over a few key terms that you'll hear a lot during this presentation. You hear a lot when talking about cryptocurrencies and such. So the first thing is wallet. Everybody knows wallet. That's essentially your bank account. It's where the information is stored, basically where your crypto is stored. Kind of like a bank account where your money is stored at a bank. Wallet, it's where your crypto is stored. Your wallet ID number or address is kind of like the bank account number. That's your own personal number. Nobody else has another one like it. And the blockchain is kind of like your check register, but it's a public register. So it's not just yours, it's a history of all of the cryptocurrency transactions for that type of cryptocurrency.
Okay. So we'll just talk about, just briefly, just some high-level descriptions of what we're going to be discussing today. So at its highest level, we're going to be discussing digital assets, right? So what are digital assets? Essentially, digital assets are any item of value that exists in a digital format. That's obviously the most important part of a digital asset, is that it's only digital. It's not something tangible that you can hold in your hands. And it's owned and controlled by an individual, or could be a company, an organization as well. Digital assets, they're stored, they're transferred, and they're used exclusively electronically. Digital assets do have a monetary value. Sometimes they're stated values. We'll get into that. Cryptocurrency has a stated value. Bitcoin trades at a stated value, but something like a non-fungible token that we'll get into doesn't necessarily have a stated value. Dave's going to talk about some of the tax implications of cryptocurrency in a little bit, but the IRS has actually come up with its own definition of digital assets. And what they call it is any digital representation of value recorded on a cryptographically secured distributed ledger, which we all know is the blockchain, or similar technology. And we'll get into the blockchain as well. And two great examples, which we'll be talking about today, of digital assets are cryptocurrency and non-fungible tokens. So what is crypto? Oh, go ahead, Dave.
Also known as NFTs.
NFTs, correct. So what is cryptocurrency? Cryptocurrency, it's actually exactly what it sounds like, right? It's currency. It's digital or virtual currency, okay? They're in the form of tokens, and those tokens exist on the blockchain, and that's what's unique about cryptocurrency. What's also unique about cryptocurrency is that it's decentralized. It's an entirely decentralized system, which means that there isn't any government oversight over the transactions of the cryptocurrency that's on the blockchain. The term crypto, which is within cryptocurrency, it comes from the term cryptography. And cryptography at its core, it's just the use of mathematical or computational methods to encode and decode data. And that's essentially what's going on with cryptocurrency is there's a lot of back-end mathematical coding that goes on that are done by what are called cryptocurrency miners. And there are companies that exist now that own very high-powered computers that effectuate this cryptography in order to create new cryptocurrencies. So that's how it sort of got its name. Um, and there's a process called mining, which is the way that cryptocurrency is created in the first place. And that's how new coins are created. And the mining process also verifies transfers across other users. We're going to get into that as well.
And miners are essentially people who are solving mathematical equations in order to uncover these cryptocurrency coins. They're usually a lot smarter than all of us.
Yeah, the term miners, you might have heard that a lot. Miners or mining. It's actually it has a dual purpose name. A miner could either be a person or a miner could be a reference to the computer that is effectuating all of this coding. So if you ever hear cryptocurrency mining machines, that's a reference to the computers. But if you hear about cryptocurrency mining personnel, that's going to be about the human beings themselves. Okay, so what is a non-fungible token? We all know that probably as an NFT that is out in pop culture, if you will, what it's known as. A non-fungible token or an NFT, it's a unique digital asset and it represents ownership or proof of authenticity of something. And when I say something, that's a very broad term, right? NFTs could come in many different forms. A lot of times you'll see they're in the forms of images, right? There's a lot of popular ones out there, CryptoPunks and Bored Apes, and they're essentially picture files, right? And what makes that unique is the underlying metadata within the NFT. But NFTs could have other forms. NFTs could be in the form of music or videos. There's actually even virtual real estate now, which is transacted in the form of an NFT. So at its core, an NFT is essentially call it a file, right? An image file if it's a digital art, and that image file is put onto the blockchain. It's a process that's called minting. And once it's put onto the blockchain, all of the metadata for that very specific file that is on the blockchain, that's what makes it unique. That's what makes it different from any other copy of that same exact picture file. So you could have one picture, call it the Mona Lisa, that gets put onto the blockchain, and that's the NFT. That's the original. Somebody can make copies of it, but those copies don't have the same metadata as the original, and that's what makes it unique. It's a little different from cryptocurrency, right? Think about dollars, right? You put money into the bank. So if you go to the bank and bring $100 bill to the bank, and then you go back to the bank a week later and you take $100 out, they're not handing you back the same $100 bill, right? You're getting whatever's in circulation at the time. That's exactly the way cryptocurrency works. NFTs are like a piece of art. If you have, say a vault of sorts, and you put your piece of artwork into the vault. When you go back to your own vault and retrieve that artwork, it's the same exact artwork. That's an NFT. That's the difference between an NFT and a cryptocurrency. So David is going to tell you about all the different types of cryptocurrencies.
Yeah, we're going to list all 18,000 of them, so we'll be here a while. Just kidding. So there are over 18,000 cryptocurrencies in circulation currently. Most of these are inactive and worthless. I guess many of them. There are, I guess, 8,000 to 9,000 that are still, active cryptocurrencies in the market somewhere. but many of those are worth fractions of pennies. So currently, as of this morning, the total market cap of all cryptocurrencies is $3.349 trillion with a T. So basically, Bitcoin makes up more than 51% of that at 1.81 trillion. The top 10 are about 79% of the total market cap. So the other ones you probably heard of: Ethereum, Tether, Solana, Dogecoin, which is ninth on the list. Those are the big name ones. But again, Bitcoin is half of it all. So in the top 10 make up almost 90% of it. Interestingly, though, right now, Bitcoin, if it was listed as a stock, essentially, it would have the 6th highest market cap out of any stock in the world. Nvidia #1, Apple, Google, Microsoft, Amazon, those are the only ones above it. And Broadcom is right on its tail at this point. So, you can really see that people invest in this. It's worth, a lot of people have a lot of faith in these. Moving on. So where can you buy cryptocurrency? Cryptocurrencies can be purchased through crypto exchanges. The most popular is being Coinbase, Binance, Galaxy, Kraken, Gemini, Crypto.com. Certain brokerage platforms, Robinhood, eToro, Webull, they'll let you invest in crypto in addition to those crypto exchanges. But something like Merrill Lynch and Fidelity, the real large ones, haven't gotten to that point yet. They may in the future. I guess time will tell. You can actually get from crypto ATMs. So crypto ATMs are essentially, it's an ATM. It's exactly what it sounds like. And you can buy and sell your crypto or on the ATM. The one downside to that is, you get charged fees of 10 to 20%. So you'd be like, why would people do that? Well, hey, a lot of us work in the divorce world. They want to hide assets. You could do it for cash and put cash in a crypto ATM or get cash out. So, that's always a possibility. And then starting in 2024, if you want to invest in crypto and you didn't want the full exposure of it, the SEC approved EFTs for crypto. So in January of 2024, it was 11 Bitcoin EFTs. And then July, the SEC gave final approval for Ethereum to start trading EFTs. So, if you want to kind of think about it, if you had it the old days of it, it was, very difficult to buy and sell these things. So you had a wallet. If you lost that wallet, you basically lost your crypto. I know that there was an entire episode of it on The Big Bang Theory where Sheldon kind of played a joke on everybody and they all lost all millions of dollars of crypto. But things like that happen. You lost your wallet and you lost your crypto. Today, there's help desks and, it's a lot more regulated. So those issues on most of the popular exchanges are not going to happen as often.
Yeah, actually piggybacking off of what Dave just said about the popular exchanges, what's really important to know is a lot of these companies they're not just legitimate companies, but they're publicly traded. Coinbase went public in 2021. Gemini just went public a few months ago. Gemini is owned by the Winklevoss brothers. Some of you may know them from Facebook fame as the apparent creators of Facebook that Mark Zuckerberg stole the idea from. That's neither here nor there. The point is, these companies are legitimate, and if they're not public, a lot of these exchanges, they're backed with private equity money and venture capital. They're real companies with real offices, and they are subpoenaable, if that is a verb. I have been involved in cases where subpoenas have been served on Coinbase or Galaxy, and responses have been returned with whatever's being asked for, transaction history. We're going to get into some of the documents that you want on these exchanges, but they are legitimate companies. So I just thought that was just an important thing to note. And if you're wondering, whether cryptocurrency is a legitimate thing, or you're still on the fence about, is it here to stay? Is it real? Crypto.com is actually the sponsor of Crypto.com Arena, which is where the Las Vegas Raiders play their football games. So, these aren't small operations, if you will.
Nope, not at all.
Okay, so moving on.
Okay, so what are the uses for cryptocurrencies? Obviously, a lot of people use them as an alternative investment option. They buy and sell that, kind of like a stock. Obviously, it's not the same because it's not a, public exchange. But you can buy and sell them and keep them to try, and store value. Those are really the two options, kind of like gold. We used to do it in gold. People bought blocks of gold to keep because they didn't trust the government. Well, this is the new way of not trusting the government, is to invest in cryptocurrencies. Essentially, it's an alternative vehicle to the dollar.
Yeah, and to add to that, as an alternative investment option, cryptocurrency is commonly seen as a risk-on asset. It's seen, kind of trades right alongside the more risky technology stocks that are on the S&P 500. Um, my favorite show, Shark Tank. Some of you may be familiar with Kevin O'Leary. He's also known as Mr. Wonderful. He was recently quoted as saying cryptocurrency is currently about 11% of his entire investment portfolio. And when Bitcoin really started to rise in around COVID in 2020, that cryptocurrency, his exposure to it was almost 20% of his portfolio, strictly on the fact that he made so much money off of it. And I know we all feel bad for him about it. But nonetheless, that is, that's a legitimate investor who is putting out there that it's a not an immaterial part of his portfolio.
Other uses of cryptocurrency to purchase goods and services. You can use it as an app on the phone to send money from a digital wallet. There are Coinbase debit cards and credit cards now. You can pay either cryptocurrency or the US dollar. Places that take it: Subway, Home Depot, AMC, the movie place, AT&T, Expedia. If anyone knows, the very first purchase of using cryptocurrency was Papa John's Pizza. It was back in 2016. Does that sound right, Lou?
It was back in 2010.
All right, 2010, right. And it was essentially a Florida man. You paid 10,000 Bitcoin for 2 Papa John's pizzas for $41. That today would be worth like 1.1 billion in Bitcoin. So you can see, if he would have just kept that, not bought some pizza because he was, he was hungry, he'd have a lot more money going for him right now. So
That's correct. And a lot of people, they ask, well, how do you use cryptocurrency to buy goods and services, right? So we talked about Coinbase before, how it went public in 2021. Coinbase actually issues a Visa debit card now. When you're paying for goods and services, you could swipe that debit card just like you would swipe your Chase debit card or your Bank of America debit card. And you have the option of paying for goods and services in US dollars, whereby the whatever cryptocurrency you've selected to be used in that transaction will instantly be monetized into US dollars and then used for the purchase. Or if that particular vendor is set up to accept cryptocurrency, you can instruct it to send cryptocurrency in kind directly to pay for that goods and service, and it's going to be based on whatever the trading rate is at that time. So that's one way, and then there's apps on your phone. You can have a Coinbase app, and just like people have Apple Pay or Gmail or Google Pay on their phones, you can have the same thing set up with your digital wallet, right on your phone and scan the credit card reader the same way and pay with either cryptocurrency or convert it to US dollars.
And you can now get paid in cryptocurrency as well. So there are companies that have set it up so that you could get paid directly in cryptocurrency. And then you can do what you want if you want to use it for any of the three things that we talked about, investing, storing value, or buying things, and some of the sports teams now, they take cryptocurrency for their tickets. The Dallas Mavericks, which kind of makes sense based on Mark Cuban being their owner. Stephen Ross's Miami Dolphins, he does it as well. So it's not just we all think of it as it's really just still getting started. Yes, but there are a lot of people that do it, and I know as a poker player, I do know a lot of people in the poker community. They love crypto. They talk about it all the time at the tables, and literally they take cryptocurrency when they loan money to each other. So it really is not just as small as it used to be. It's really gaining traction in the world.
Yes. And there's a reason why we're telling you this, especially if you're a matrimonial attorney and you have a net worth statement to fill out on behalf of your client, and part of that are monthly expenses, right? And if you're not if your client is using their Coinbase Visa debit card in order to pay for things, and all of that activity is going to be on a Coinbase statement somewhere, you're going to miss it if you're only looking at your traditional Chase and Bank of America statement. So, if you have a client who is involved in cryptocurrency, it's definitely worth it to ask if they have taken the step to start paying for, any lifestyle expenses with cryptocurrency.
Okay, now we're going to talk about taxes, everybody's favorite. So in 2020, the IRS started requiring taxpayers to check off a box right on page 1 of their personal tax return, disclosing if they received or sold digital assets, not if they purchased, but if they sold it or received it. So you can see, in the little box here, at any time did you receive as a reward, award, or payment of property or services, or be sell, exchange, or otherwise disposable digital asset, or a financial interest in a digital asset like an NFT. So, we're going to talk, the IRS obviously now wants to know, because it's a capital asset. It's essentially akin, although it's not the same, it's akin to owning a stock at this point. And if you buy and sell it, you have to report it, the gains and losses on Schedule D of your personal tax return. So for all us matrimonials, when you get somebody's personal tax return, if you see that is checked off in any of the last number of years, you need to start asking for documents and starting to worry about cryptocurrency and what's going on with it. So in 2014, the IRS issued notice 2014-21 and 2014-16 IRB, explaining that virtual currency is a property for federal income tax purposes, which is why it goes on to capital gains, because it's considered property. So it's literally, as we talked about, a digital representation of value other than a representation of the US dollar or a foreign currency. So, some are convertible, some, virtual currencies are convertible. You can have an equivalent in real currency, or act as a substitute for real currency. And the IRS uses virtual currency as a term to describe the various types of convertible virtual currencies that are in mediums exchanges, such as digital currencies, cryptocurrencies, and NFTs, essentially. So why is this important? Because it tells you the amounts, first of all, on Schedule D, that they bought and sold. And if you go to the next page, which is Form 8949, this is where you lay out all of the information. So the description of property, say it's Bitcoin, and then when you acquired it in 2019, you have to specifically give a date, then date sold. So you want to see what's happened at least in between those dates, if not more than that. The proceeds you got from it, the cost basis for it. So if you bought, if you have a slow, you bought it early on, 2016, 2018, something like that, you're going to have a very low cost basis. So even if you sold it for $100,000, that's the equivalent of essentially one Bitcoin at this point. So if they bought more than one because they weren't overly expensive back then, they could have a lot more. So we're going to go through how you're going to use all this information to essentially trace and try and figure out what other cryptocurrencies and NFTs and things like that they have. Moving on.
All right. So Dave mentioned earlier what a wallet and a wallet address was. Let's get a little bit more detailed on it, right? So crypto wallets, essentially, they store all of your information that's necessary to buy and sell cryptocurrency with that particular wallet. And it keeps your cryptocurrency safe and accessible for spending, sending it somewhere else, or saving it. One really important thing to understand is that the cryptocurrency is not actually in that particular wallet. All cryptocurrency resides on the blockchain. It's the wallet that gives the instruction to the blockchain in order to do anything with that cryptocurrency, to either send it to another wallet, to either sell it, to transfer it. So that's important. Now, what the wallet actually contains is what's called a private key. So anytime an individual owns a wallet, they have two different keys. One is a private key and the other is a public key. The public key is what is out in the public domain and what everybody knows. The public key allows one user to send cryptocurrency to that public key, but you can only instruct a wallet to send it out of that particular wallet if you have the private key. And most traditionally, that private key, it's not written down somewhere. You're not going to type it in. It's contained within the wallet itself. So by logging on to whatever wallet website you're using, you are essentially saying, I'm the user of this wallet. I have the login credentials, and therefore I have access to the private key, and therefore I'm able to instruct the blockchain to send, 1 Bitcoin somewhere else. Okay. So the way it typically works in a cryptocurrency transaction is you would go onto your wallet, and you would put in another wallet address, and you would say send a certain amount of cryptocurrency to the wallet address that you're instructing it to send to. Um, Different blockchains have different types of wallet addresses. So uh, Bitcoin is one type of blockchain. Ethereum is a different type of blockchain. So if you have somebody who is operating within both Bitcoin and Ethereum worlds, they're going to have two different wallets. Bitcoin wallet addresses, they could be 26 to 35 characters long, and Ethereum wallet addresses are exactly 42 characters long, and they typically start with a 0 and an X. So we're going to show you that in a little bit. There's two main different types of wallets, and they essentially refer to the connectivity of that wallet. There's hot wallets and there's cold wallets. The hot wallet, think about something that's hot wired. It's actually connected to the internet. Examples of that are a web wallet. So you go to a certain website, you log in, and now you have access to the cryptocurrency that you own that's on the blockchain. And you're able to send instructions about what to do with that cryptocurrency, or just observe what is in the wallet. We put some examples here because within the context of your case, you may come across some names that you're not familiar with, some terms. So some very common and popular web wallets, as they call them, are MetaMask, Exodus, Trust Wallet, and I'm sure we've all heard of Coinbase. Another type of wallet is a desktop wallet, and that's basically a program that gets downloaded onto your computer and acts as the wallet. So just like you would open Microsoft Word or Microsoft Excel, you would open up the desktop wallet just like any other app, and now you are logged into your wallet once again. And you can, by virtue of logging in there, you're able to, once again, instruct the blockchain on what to do with your cryptocurrency. We jotted down some popular names again for you. Exodus is another, once again, that's there for the web wallet. They also do desktop wallets. Sparrow wallet is a big one. Electrum is another big one. And the last hot wallet is a mobile wallet, which I don't think needs too much explaining, but it's basically an app on your phone. So the most popular ones there are, once again, MetaMask, Exodus, and Trust Wallet. And then, of course, you can also have a Coinbase app on your phone, which will allow you to do the same thing. Then there's the cold wallet. So this is disconnected from the internet. And the key here is that if your computer gets hacked, and this is what would happen back, in 2018 and 2019 when cryptocurrency started to fall out of favor a little bit, it's because of this hacking. So someone would hack your computer and get access to your web wallet or your desktop wallet, and they would transfer the coins out of that wallet into their own. And that's because they would have access to the private key. And then you would essentially be you'd be out of luck. You wouldn't be able to get those coins back because there's a lot of anonymity with all of this cryptocurrency stuff. Essentially, none of these wallets have an account name that goes to it. You can add a public tag, which is what we'll talk about in a little bit. But if I give you a wallet address for a specific client, and you put that wallet address into a blockchain explorer, which we'll talk about, it's not going to say it's John Smith's wallet. It's just going to have the wallet address. So there's a lot of anonymity there too. But going back to what a cold wallet is, back in the old days of cryptocurrency, there were paper wallets. So what that would be is essentially a QR code, and you would sign on to your wallet only using the QR code. And only that QR code would give you access to the wallet and the cryptocurrency therein. That was the most secure way from having your cryptocurrency get stolen, but it was also the best way to lose your cryptocurrency altogether, because if you lost that QR code, there's no way to retrieve it at all. So that fell out of favor over time. One of the more popular types of wallets now are hardware wallets. The Ledger Nano is a real popular one. So if you're going through bank statements or credit card statements, during your matrimonial case, and you see payments, or you see Amazon charges for the Ledger Nano, or Trezor is another one. That is a hardware wallet which is utilized for cryptocurrency. And it is only active and only connected to the blockchain when it's actually plugged into a computer. So unless that physical actual wallet is plugged into the computer through a USB port, and we have a picture of it over on the right side here. This is the Ledger Nano. Once that's plugged in, now it's hot. Now it's connected to the blockchain, and you can instruct coins to go wherever you want it to go. But without connecting it, you're not able to do that.
And you can actually plug these into the crypto ATMs to get the money on and off of it. And
Yes. Okay, so the famous blockchain. What is the blockchain? So I like to use a sort of a synonym for it because it's very difficult to wrap your head around, right? So imagine a digital notebook, right? That everyone can see, and no one can ever erase or change any of the past entries. Once something's written in that notebook, it's there forever, never to be changed. And then this notebook is shared across thousands of computers worldwide. Everybody can see what's in the notebook. And every time someone writes an entry into this notebook, every copy of this notebook gets updated so that everyone has the most up-to-date version of that notebook. That's basically what the blockchain is. It's a shared, secure, unchangeable record of every transaction from the beginning of time from when Bitcoin was first created in 2008. The data for each block on the blockchain, it carries the information forward from the prior block. It's sort of a building block, right? So if anyone were to tamper with or change an earlier block, it would change the rest of it, and everybody would know, and that transaction would be shut down, or that change would be shut down. So that's sort of the synonymous version of what the blockchain is. We do have a picture example here. So the blockchain's made up of many blocks, okay? And every block is made up of transactions. Each transaction goes through what's called the mining process. So the mining process is the transaction goes through hundreds of nodes. They're called nodes, and they're basically computers. And what those computers do is instantaneously they verify the private key for the sending. They make sure within this transaction, whoever is giving the instruction to send the coins actually has the private key. Without the private key, they're not allowed to give that instruction. So they verify the private key and they verify the public key on the receiving side. Once that is verified, not once, not twice, but 100 times, and instantly, that transaction is added to the blockchain. These nodes, they verify the transactions in groups. Those groups are known as blocks. So once a block of transactions are all verified, it gets added to the blockchain, and essentially it's cemented in there. It's never to be changed. It's never to be removed, and it's publicly available for all time for anybody to observe. And there is technology, which we're going to talk about in a few slides, that allows you to actually see every single transaction within the blockchain for a particular wallet address. So with that, we'll move on to just quickly why it's also important, Dave.
Yeah, so if you look at 2010 when Bitcoin kind of started, we're just talking about Bitcoin here because it's the largest one and it's 51% of all the market cap. You can see there's basically no value, and it really continues like that. I mean, in 2014 you see a small rise, and then it just keeps going, and then in 2018 it just kind of shoots up, and then after the pandemic it just goes crazy. So it goes way up and comes down, up and then down when you start to hit inflation. And then when it looks like the soft landing's coming, it really shoots up again. And then you have the election, and Trump starts talking about having a Bitcoin reserve and how Bitcoin's a good investment. And it really starts shooting up again. And now with all the tariffs coming and the slowdown, the potential slowdown in the economy, I guess we're going to find out. It's really starting to take a hit again. So it kind of like flies in the same range as technology stocks, where it's it's a future looking model, obviously, at the end of the day, because people are always betting on what's going to happen tomorrow, right? And what's the price going to be going forward and what it's going to be worth. Kind of like any business, you're looking at what the future looking is. But at the end of the day, you can see that over the last 6 months, it's lost almost 15% of its value. Over the last year, it's lost almost 3.5%. But over the last 2 years, it's gained 143%. And in the last 3 years, 460%. And if you go for 7 years, 1,951. So if you had one share that that's now worth $100,000, call it, you basically bought it for, in 2017 at, I don't know, $2,000. Not even. No, much less than that.
Much less.
Much less than that. You're talking like $100. So, you can really see that you can invest very little and now have a lot. So that's why it's important to understand this, because when you're looking at those, the schedule, it's Schedule D, and it gives you the date which they bought it. If someone bought 100 shares, they could have bought it for $1,000, 2,000. It's not necessarily a lot of money at some time, and now it could be worth tens of millions of dollars. So you really have to kind of keep an eye on it. And what we're gonna show you, now is what you need to ask for, and then how it all fits into the scheme of what we've told you about looking for what may or may not still be there.
Yeah, so and at the end of the day, an investment back in either the late teens or right around COVID, an investment that may have seemed inconsequential at the time, could now be worth some serious money now, and it could be hidden away on a wallet that's unbeknownst to to your client or one of the spouses, within a matrimonial action. So, we definitely encourage, at least, asking the questions and understanding if there was, some early on investment into cryptocurrency, because that early on investment would be worth multiples now.
All right, Lou, we have a question. Is the wallet ID unique to the owner? Oh, the wallet ID is actually unique to the wallet. Not
That's
necessarily.
correct.
The owner could have 10 different wallets, and we're going to kind of show you how that works and how we look for that stuff. So it's not unique to the owner, it's unique to the wallet.
Exactly. And you may be asking yourself, well, why would one owner set up multiple wallets and why does someone have multiple bank accounts? They may keep it, separate for certain reasons, or they may try to send crypto from one wallet to the next wallet to the next wallet in order to hide it. But every wallet's unique, and one user or owner could have multiple wallets, and they would all have their own unique wallet address.
Right. And for us older people, maybe they wanted toasters, which is why they have multiple bank accounts. They used
Sure.
to out the toasters and whatever else. So, but that doesn't apply to crypto with wallets.
All right. Let's get into some documents that we typically ask for. And I recommend, that you ask for these if there's a concern about cryptocurrency in your case. So the first one is bank statements for the period reviewed. On the very next statement, we're just going to show you a quick a screenshot of a Chase account, and just to show you what it looks like. And the statements, they actually say, wire to Coinbase, or incoming wire from Galaxy Digital, right? And that's why we had that slide earlier with those exchanges, so that you can see, what are the exchanges in which cryptocurrency is purchased. Because when you see US dollars leaving a bank account or coming back into a bank account from one of those names that we mentioned earlier, it was most likely in order to purchase cryptocurrency or sell cryptocurrency, because that's why you would send it to those exchanges. So we always ask for bank statements for whatever the necessary period is, right? David mentioned earlier about the reporting for sales of cryptocurrency on Schedule D of the tax return. Well, if Schedule D of the tax return is reporting some sales in which it reports that the cryptocurrency was originally purchased in 2021, you certainly want to start looking at bank statements in 2021, because even though some of the crypto was sold, it might not be all the crypto that was sold. And that's definitely a starting point for any tracing that you're doing, to make sure either all of it was sold, or maybe there's still some out there that you're looking to find. The personal tax returns, for obvious reasons. David went through all of the tax reporting that occurs now for cryptocurrency. A list of the wallet numbers and the public keys for all of the wallets that are utilized. Once we have that wallet number, we're able to obtain all of the transaction data for that particular wallet. It's all within the public domain. I'm going to show you live how we do that right on the internet. So we just need a list of the wallet numbers, every wallet number that's ever been utilized, not just what's currently holding cryptocurrency. And there's a reason for that. Like I said earlier, there's anonymity to this. So if we're tracing two disclosed wallets and we see activity with a third and a fourth wallet that wasn't disclosed because it currently doesn't hold any coins, but back in the day may have owned some stuff, we need that, because we need to know that that is a wallet that was at one point utilized by this particular person. So we ask for a list of wallet numbers that were utilized from the beginning of time. Transaction reports with the digital asset exchanges. I'm going to show you what it looks like. If you're talking about Coinbase, then Binance is another popular one. Gemini, Galaxy, any of those real popular cryptocurrency exchanges, they have what are called omnibus wallets. Okay, so you don't actually have the wallet. Coinbase has the wallet. You get a statement that tells you of Coinbase's wallet what you have entitlement to. So that particular wallet for Coinbase could have 10 million transactions in it. Your own transactions in your own Coinbase account may account for a handful of them, right? But then it gets mixed in with all the other transactions that are happening in Coinbase because Coinbase only has custody of so many wallets and your coins are within those wallets. You get a statement or a transaction report from Coinbase that says, of your Bitcoin or your Ethereum, here is how much you started the month with. You purchased some more, you sold some more, you transferred some out, you transferred some in, and they are keeping sort of a record of the total crypto that is in Coinbase's wallet. What is yours? Okay, so and it's kind of similar with Chase, right? Chase collects money from everybody, and they keep it wherever Chase keeps it, in in a vault somewhere. And you get your statement that tells you, your balance in your account today is $1 million. But it doesn't necessarily mean that, there's, $1 million sitting, in a safe somewhere at Chase Bank that has, David Graulich written on it, right?
All
So
right, I'm rich. Who
because he
knew?
would want that instantly, right? So nonetheless, so that's important when you're talking about Coinbase and Binance and digital exchanges. You have to get those transaction reports because the public information, it's like finding a needle in a haystack. And last but not least, of course, statement of net worth if you're in New York. For our friends in Connecticut or Florida, financial affidavit is what you call them. Um, those are those are sworn documents, right? And wallets are assets. And digital asset wallets should be disclosed on the statement of net worth. So a lot of times we'll ask for that up front and we'll go to see what is actually disclosed on the wallet, because that's our starting point. That's at least what's admitted to. And then, a lot of times it dovetails from there.
All right, Lou, we got a couple of questions and I think we need to do a better job of explaining this, I guess. One of the questions, if the ledger is on each computer for years, how would I know I had a true copy of the ledger? Since transactions are happening every day, what does it mean for multiple cryptos, multiple ledgers? The ledger is not on your computer. The ledger is on the blockchain, essentially. And it keeps every transaction, not just yours, but every single transaction of that crypto.
Exactly. So to use some more common terminology, let's say you have Chase account number 1234, and Chase suddenly offers this amazing service where you can put Chase 1234 into their database and it pulls every transaction from that every transaction associated with Chase 1234 and puts it in a nice spreadsheet for you. That's what these public blockchain explorers do, is you give it the wallet address, and every time that wallet address appears in a transaction, whether it's outgoing or incoming, it essentially creates a database for you of every transaction, and that's why it's public. And it all goes into the blockchain in order to get that information.
Right, but you can't just separate out your transactions from the blockchain. That's what the wallet does.
That's what the wallet address is for,
Right.
correct.
So,
And if you
so
don't,
there's no ledger that tells you exactly what you have. Okay, that the wallet shows you that, and we're going to get into that in a minute.
yeah, and if you don't trust one blockchain explorer, I had this on we did like a lunch and learn for that, and someone asked, how do you know that the information that you're getting out of this website, this blockchain explorer, how do you know that's accurate? There's multiple blockchain explorers, and you can cross-reference the information. You could do it twice on two different blockchain explorers and make sure that the information that you get out of it is the same. And we'll do that a lot.
And then another question, how do you square spending any crypto if it climbs as an investment? I think, Thomas, I think what you're asking is, is this like wasteful marital waste? Because instead of holding an investment, you're selling the investment or using it to buy something. Well, you can make the same case for any stock or anything at that point. So I guess that, you know, if that's a claim you want to make, I don't think we've ever been asked to do that.
No.
No. And is it just hiding assets? No, people use this to invest or as a real way to store money. It's not, you know, it's not just hiding. So.
Correct. And what's great is that you can't hide it, and here's why.
So this is like a copy of your bank statement, okay? And if you can see on the first line, it says Wyatt federal debit on 2/19 to Coinbase for $750,000. So once you get this information, you're going to see it going to Coinbase. You're going to start, hey, why are they transferring money to Coinbase? We know they must have an account. It gives you an account number.
And we need the statements for Coinbase.
Right. So we're going to need the Coinbase statements. Okay. And then another $100,000 to Coinbase. And then if you go down, those are payments. These are deposits. If you look at the one on 6/14, Galaxy Digital essentially sent them $14.4 million in change. Okay. So now we have to look at a Coinbase account and a Galaxy account. Okay, so you're gonna have to ask for these things. So if you see any of this, that's where you want to get us involved or start at least asking for documents with regard to these accounts and getting subpoenas out to these places so you can get all of the account statements so you can essentially follow the money or get someone who can follow the money. Okay. So if you look at the next one, this is your Coinbase transaction report. So in the upper left-hand corner, it says it's Coinbase. Okay. So that's how you know where it is. Right? You know, that's whose transaction report it is. It gives you a date range from January of 2012 to November of 23 in this, and it's filtered for all assets. Okay. So what does this show you? The very first one they bought 4.3 Bitcoin for $675.67.
Is actually $2,900.
Sorry, $2,900. It was $675 each. So that $2,900 today would be worth $430,000, give or take some. Okay. So now what happens to that Bitcoin? Well, part of it got converted into Ethereum. So 10.9 and change Ethereum, $20,000. You could see that they spent $2,906 and it went up to at least $20,000, right? But now they have another $89,000, which they're converting into more Ethereum. And this is only if you look 0.42 and 1.82, so you're talking about 2.24 Bitcoin. They bought 4.3. There's still 2 Bitcoin left, and they now have almost 60 Ethereum or 59 Ethereum. Okay. At a price of at least $119,000. So you can see that why we keep talking about, you know, this rise in the price, because it's important for this aspect of it. But these things show you, you know, exactly what happens to it. And if you go to the next one, you'll notice that here it doesn't say buy or sell, it says send. So what did this person do? They sent 44.56 Ethereum at $4,489 spot price. That's per Ethereum. And they sent it to a wallet. And this is part of the address. We didn't want to give the whole one for obvious reasons. But
yes, this is redacted in the middle. This is actually one long address.
Right. As we told you, it's 42 numbers and letters. So you can see these things. It tells you exactly what's happened. And the idea is to trace the funds and to find out what else there is and, you know, where it's all going. And Lou's going to take you through it. And I guess Tom's question is, who do you subpoena if the vendor says it's added to jurisdiction? So crypto is non-US based.
Crypto is non-US based.
Right, but they're usually doing it through a company like Coinbase or something, which have US homes that you can ask for.
That's correct. Yeah, the only one I could think of that could be international is Binance. Binance has a US division, which actually was out of business for a while because of some bad stuff that the CEO did, but President Trump recently pardoned the CEO, so Binance US is coming back, but there's Binance International. But as far as jurisdiction goes, I would think that if you're dealing with a U.S. resident who's sending money to Coinbase, shouldn't be a problem with sending a subpoena to Coinbase.
Right, and that's why we're showing you the bank statement, because it tells you what bank or what company the money's going to. So I showed you it was Coinbase coming, it was money going out to Coinbase, and it was Galaxy money coming in. So that's who you would actually subpoena, those companies.
Yep. So we only have 3 minutes left, so I want to run through this quickly. So you see this wallet address, and now we're asking ourselves, where did the 44 go? There's all sorts of confidentiality agreements in place with this particular case right here. So I'm not going to show you that wallet address, but I'm going to show you another one. And we're going to put it into a blockchain explorer. So blockchain explorers are websites, and it's all publicly available information. All you need is a wallet address to get yourself started, and then you can also search by other metrics. I'm going to show you a hash number because it could be very helpful. Each blockchain is separate, right? There's a Bitcoin blockchain, there's an Ethereum blockchain. If you're looking at transactions of Bitcoin, you're going to need a Bitcoin blockchain explorer, such as blockchain.com. If you're looking at Ethereum, you're going to need an Ethereum blockchain explorer, which is we use etherscan.io. There's also a last one called BitQuery, which I really like. I use that. That's for all blockchains as well. So I'm going to show you Etherscan quickly. So let me end the slideshow. Let me unshare my screen a second. So now you see us briefly, and I'm going to share.
We
this.
apologize for that.
We do apologize for that. Okay, so here is this is etherscan.io. Okay, how did I get here? I opened up Chrome and I typed in etherscan.io. Okay, so now you're looking at an interface here that has a search function. Okay, you could search, like I said, by address, by transaction hash. So let's start with address. So in this particular case, we were given this wallet address as something that is owned by the husband. So we do that search. Okay, so what this does, what Etherscan just did, was it pulled this address and it pulled every time this particular address that ends in 84B9, every time it received or every time it's sent out. Okay, so what we do is we download this information. There's a function right here, download page data. I'll show you quickly what it looks like, but it's very cumbersome. And we organize this because we're very proficient with Microsoft Excel, because we're accountants and that's what we do. Okay, so this is basically showing you all of your ins and your outs. Where did it come from? Where did it go to? How much Ethereum? What was the value of that Ethereum on that day? So what was really interesting to me was this was a wallet that was disclosed by the husband. And we see 427 Ethereum going to this 86A. So we are going to now click that one, and we are going to see what is going on with 86A. Okay. So we saw the 427 come in. I'm going to reverse for a second. The 427 that went out, I wanted to know, how did it get there in the first place? Okay, so we see these big chunky transactions in early on, and we saw this 1221 wallet where 110 Ethereum were received from. And this one was not disclosed by the husband. So we wanted to know what this was. So we looked further into it. Okay. And now we can see here's the 110 that we just observed. And now we go back through the data beforehand. Now, really interesting, there was 110 that came in a couple of years earlier. Now, this is from Binance. Now, look at this wallet. This wallet, nowhere can you see the client's name within this wallet because it's anonymous. Okay. This is a particular wallet. This particular person was using MetaMask as their custodian for the wallet. So he would log on to MetaMask and be able to tell this wallet what to do. But there's no naming of the wallet. This is different for the exchanges, and this is what I mentioned earlier. So now we see that he received 110 Ethereum from Binance. So now we think to ourselves, he must have a Binance account, okay? But we can't personally go onto this blockchain explorer and find his transactions because when we go to Binance, this is Binance's wallet, and there's 13 million transactions within this wallet. So there's no way for us to pull out which of his were specifically making up that 110 Ethereum. What
Right,
we
those are not all his Binance transactions.
Exactly. And if you don't know that, it could create a problem because you can open this up and see over at the top left that this particular wallet holds 22,368 Ethereum with a value of $63 million. You could set yourself down the wrong path very quickly, which is why we've done a lot of research to understand all of this. So when we see something like that, this wallet's been tagged, okay? I'm going to go back to it one more time, and you can see here, I'm hovering over this. It's called the public name tag. So Binance tagged its own wallet so that anyone who's looking through the blockchain, they know that these are transactions from Binance. What we need are the statements for Binance in order to see how this 110 Ethereum came about. So that becomes our next discovery request, are statements for Binance that at least cover November 8th, 2021 and the period before that so that we can understand it. Now, let's say you want to present this at a deposition, right? You haven't gotten discovery, you haven't gotten the Binance statements. They're arguing that there is no Binance account, and you want to bring this to the deposition as an exhibit in a nice, easy way. What you can do is over on the left, I mentioned you can search by hash, and you can search. We're going to look for that 110 with Binance. You can copy it, and now go back to your search function, paste it in, and search for the hash. And what the hash is going to give you is a nice printout for this one single transaction. And it's going to show you that it was from this wallet to his wallet, the value of it. There's transaction fees always associated with cryptocurrency, so don't be surprised by that. You can click more details here. It'll give you the price at which Ethereum was trading on at the day of that transaction. It's essentially a nice little summary of that one transaction that you can present at a deposition or even at trial. I've done this at trial, and ask your questions based on that exhibit. So this is essentially a blockchain explorer. And what we do, just to sort of show you quickly, we put all of this into spreadsheets that show ins and outs, and we name these wallets because the wallet addresses are too cumbersome to constantly go by. So we nickname them Wallet 1, Wallet 2, Wallet 3. We essentially go through and we say, okay, Wallet 2, here's the activity that we got from the Blockchain Explorer. Here's 427 Ethereum that came in from this wallet address. We put that into Etherscan. We get all the detail from it. Now we have another set of detail that we're going to go through. And just like we're tracing bank accounts, we're going to understand all of the ins and all of the outs until we get to something like, I think it was here, like we just looked at, 110 Ethereum came in from Binance, and we have no idea what that is. And we have to ask our questions and continue to develop the tracing. And that's essentially how the tracing works in real life. So with that said, I'll unshare that. I will reshare over here. Let's get this going again. Oh, I started it from the beginning. Let's not do that. Sorry about that. I'm going to pick it up from our very last slide. Here
So
you
we
go.
thank you for joining us,
Sorry for going over our time a little bit.
Yep. And if you have any questions, just contact Lou or myself and we're more than glad to help you out.
Absolutely. And
One
we're
last
always,
Oh, we have a thank you. You're quite welcome.
any other questions in the queue?
That's it.
All right. We understand this is some esoteric stuff. So we definitely encourage, you have our email addresses here. Feel free to email us or Sammy. We could send you a copy of this presentation. Feel free to ask us, any questions that you have on the tracing, on cryptocurrency in general. We're always happy to help. We're always happy to learn more ourselves by answering your questions. So, please do ask.
Thank you very much. Have a
All
good
right. Bye-bye now.